What's going on, everybody? Michael Silva here. Was today's price action just a big bull trap heading into tomorrow's CPI print? That's what we're going to talk about on today's Stock Market Brief Show. Let's go ahead and get into it. All right, everybody, welcome back. We're starting here at the 11 sectors that make up the S&P 500. So we had a nice bullish day today, and you could see that it was led by the technology and consumer discretionary sectors leading the way, and also financials was up there in the top four. When these ones are up in the top rankings, it's really likely to see a trend today take place in the markets where you see a series of higher highs, higher lows, and you typically close at the high of the day. And I'll explain to you how I found that on early on here in the trading session momentarily. Now, if we just take a look at the daily price action, there are some things that I want to call out on these index products. The S&P 500, a lot of people are going to start calling out this bull flag formation, right? This is a bullish consolidation, right? It ran, boom. Now we're bull flagging, so it could potentially take us up higher. Now, keep in mind, why can this potentially be a bull trap? Well, this was kind of just a, nice move to the upside, but it wasn't on a really high volume. And when you take a look into the internals, what you'll see is there's a lot more volatility packed when we get this report, and we'll go over those specific levels. If you look at the NASDAQ 100, the NDX, this is also in a flagging formation, as you can see, and you can see the MACD is starting to curl itself over, and today was also on declining volume. So a low volume kind of float high, which is not necessarily a bad thing, but the volatility of it is what's going to not necessarily make it a bearish or bullish thing, but it will let us know that, hey, this market's going to get moving. NASDAQ Composite, same thing, declining volume. MACD is starting to curl over, and we have this flagging formation. We talked about this one yesterday, how it could be just potentially back testing this kind of chop box right here. The last one is the Dow Jones Industrial Average. This one actually had inclining volume. We talked about this one on the prior episode, and it really does actually look pretty bullish right here. As you can see, prices really just contracting, coiling up, getting tighter. We had a nice big move today, up 1.1%. So if we do start breaking out of this 34,500, this thing can really potentially get rolling. Remember, it was actually one of the stronger performance from the bottom over here. And then in 2023, it's not the biggest performer. It's been kind of the laggard of the index products, but it could just be consolidating its prior gains from before. Now, earlier in the Discord, in the Patreon group, which is a pinned comment below, I'll go over the zones momentarily and walk you through it. But there was one note that I put out. I had to walk out a little bit early, but it was 7:32 a.m. And basically what I was saying was a quick observation. The SPY, I was looking at the 2-minute chart, and it was bullish, right? We gapped up, which is typically bullish. And the gap up, understand that I'm looking at another time frame too. So this gapped up above the high of the prior trading day, and you can see we had to move down, we gapped lower, and we closed higher, which is typically bullish. So on a gap up in these circumstances and above these moving averages, it's bullish, right? Okay, but another thing that I called out here was where am I looking? The VWAP, there we go. The VWAP is holding and increasing in value. So out of the gate, what I do here, and I use TrendSpider to do this, I anchor a VWAP right here on the starting candle, 1 minute, 2 minute. I like to look at intraday to really hone in on timing my entries. And I like to also see the volume spikes on the 1 minute charts and 2 minute charts if anything interesting comes. But you can see out of the gate, right, we had profit takers come in early on. We reclaimed the VWAP right here. We back tested it. We just consolidated, and then we back tested it again. And then we really started running. So after this run, I didn't catch this run here, but what I was looking for was a potential pullback to the lower VWAP. Now, because the VWAP was inclining, we had the gap up right over here, and it was still holding. These are the type of things that could potentially make for a trend day where you close, at the high potentially of the day, which we see that pretty frequently. But there was a couple other aspects in that. Now, I didn't enter in at the VWAP, but I did enter in on breakout, and I had a stop below this area right over here. But I played the Q, so the chart looked a little bit different. I like the risk to reward. A lot of people might do this where they might just put a stop here, and then they'll enter on the back test of the VWAP. So we break, back test, or potentially enter here on the U-turn where it comes in, and then there's a bunch of different ways to go about this. But I'll also point out this 0-date options, right? 0 DTE, days till expiration. These things have been really running the markets so far. And as you can see here, this was around 10:27 a.m. But you can see there was just a lot of volume. This is enormous amounts of volume traded on the SPY for zero dated contracts, right? So at the 412, the calls were really shooting for that 412. And this was at, like I said, 10:27 a.m., 245,000 contracts. There's the bears were over here, not that much lower, right? 410 and 411. But because we were in a bullish context, it seemed like they'd be trying to go for those, obviously, 412s. And as you can see here towards this was end of day, almost 500,000 in calls on that 412 strike. And you can see here when I posted this was around 77 cents. And then it closed, at, $1. So almost a 30% gain just in those. I personally don't trade options. But here's Jim Bianco also kind of talking about this and about the zero dates. So in the last 4 full NYSE only sessions, plus 45 minutes a day, the S&P 500 has reversed back and forth at least 1% 7 times. 2 of them have been at least 2%. And tomorrow, obviously, CPI, which we'll get into. This is a zero DTE world. We just live in it, right? And since the daily options for all days, right? Now it's all days of the week began last fall. Every day is an option expiration day. And the market is constantly in a gamma squeeze up or down. And we can see that in the volatility. Now, I haven't been showing the VIX chart all too frequently. Why? Well, these aren't even in that calculation. So the VIX is going down lower, but we're still seeing massive volatility, and that's coming from these zero-day expirations. Now, this is where I posted that. This is where the market ended, right? This was that little entry right over here. We saw it move up, okay, pull back down to where? Pull back into the VWAP, right? The rising VWAP. So this right here allowed for, a better average buy-in. Why did I just move that chart? So, right, so the average, when you look at the VWAP, if you don't know what that is, the volume weighted average price, it's telling us that the average buyer of all the entire day is increasing in value. So when price came down, like, hey, now I can actually buy at around the average price everyone paid since the beginning of the day. And then you can see here what happens is, okay, price came down, it backed around, and what you could do is now actually anchor in a VWAP right into this area, this back test, and then because you could see this explosive move. So a follow-up on this could be quite important. But that's kind of what I looked into. Now, let's get into the CPI stuff and what this looks like going into tomorrow. So the last CPI report was 6.5%. I'm not going to dive too much into the macro of this. I like just looking at price action and volume right now and what the markets are looking at as forward risk. Now, consensus is at 6.2%. So if consensus is correct, right, and it's a little bit lower because I know the calculation changed a little bit or something's fallen off. I'm not digging too much into that one today, but 6.2. So if it comes in at, say, 6.2 at consensus, I think that can allow for the market to rally, but it's very hard to determine because we don't know what order flow is going to really look like until, well, we see order flow taking place. Now, if it comes in under, what we can anticipate is a potential rip, right? We can potentially go higher, potentially to where? Well, the expected move. So this is what both for the SPYs and for the Qs are pricing in as far as volatility going into tomorrow's trading session. Now, this is just for tomorrow, which is huge moves. And if you look out to the end of the week, I'll show you what those look like too as well, because I pulled them already and shared them on the last video. But the SPY is looking at a plus or minus $6.5 move, and the Qs are looking at a whopping $7.3 expected move. So what does that look like? All right, so this is the 15-minute on the S&P 500. The first thing I want to call out is the February anchored VWAP. This is month to date anchored VWAP. We are now above that level and it's held as a prior area of support. So if we start cracking down through that, I can see potentially more sell side. So I talked about the $7.3 expected move, sorry, the $6.56 expected move in the SPY. Where would that take us? It'd take us to 419.39 or 406.27 if we reach one of those levels. So if we hold this VWAP, I think it opens the door for breaking through this downsloping trend line and potentially trying to go for it. But if we start breaking down from this, be on the lookout to potentially tag that lower move. Now the CPI that comes out tomorrow, it's coming out an hour before the market opens. So it's going to be important to know these levels because we may very well open up at or around those. And if we don't, if we open up lower, chances are potentially we might pull down a little bit further. Or if we gap up over here, there might be a possibility that we go and reach for those expected moves. Now, if I take a look at the 15-minute chart over here, you can see the upper weekly expected move is right around the CPI upper expected move, and then the lower one is at 398, so significantly lower right there. So you can see right here, right, this the 406.27, and when you zoom out a little bit, 406.27, it's just right here at this prior low point where we kind of had this inverse head and shoulder potential pattern, base pattern, and then we broke out of it, and now we're kind of flagging right there. So we're back above that 5-day moving average. There is a negative divergence in the works potentially building if this goes up a little bit higher. And then the PMO, it's kind of just flat as it stands right now. We really need to wait for that report to come out. If I take a look at Bookmap, a couple of things that I wanted to call out here was this 4,200 level has been kind of highlighted all throughout the day. So there's some big orders up there. So if price action does want to start ripping, start to look at that level as a potential tag. And then at around the close of business on Bookmap, you can see here 41.10 also lit up. So there's a bid right underneath us. So if price action gets hit, look for this to potentially act as a supporting bid. And if this gets absorbed, it could potentially obviously head lower. Now let's hop into the Qs really quick. We did discuss it was a $7.3 expected move. The Qs would take us to around 311.80, 297 to the downside. Now I anchored the VWAP onto February here as well. And as you can see, price action came up. And guess what? It's actually acting as a level of resistance right now. So if we start breaking back above that, that would be bullish, right? And that can open the door for potentially coming into the upper expected move for the CPI print. Overall, for the month of February, we had a nice big, strong, increasing anchored VWAP. But now you can see that it's actually flattened out to neutral. So there isn't really a trend here on this current month-to-date anchored VWAP. So if it starts breaking down through these lows, watch out because that can open the door, obviously, for that lower print and come to retest this potential low there. If I take a look at the Qs on the 15-minute time frame here, we're back above that 5-day moving average. So that is a positive sign. The bulls are in control. We're at that lower level of this melt-up channel, right? We broke out of it once. We broke down. We're right back within it. We'll see here where the market opens up going into tomorrow's trading session. If I take a look at the zones right now, if we take a look at the high for SPX, it's at 42.14. So like I said, if we get a lower than expected or potentially even at consensus, it opens the door to potentially come tag this upper area right here, which is at 42.14. And roughly that would bring us up to right around that 4,200 on ES there as well, which could fill that liquidity that's been kind of just hanging out there. That's all I got really on the zones as it stands. If you want this type of data, including a lot of other, the whole entire S&P 100, I do currencies, I do volatility, I do all those. I put them in the zones channel and I update it daily. I don't have it listed here, but it is one of the benefits. This is only $9 a month. I give trade ideas, weekly expected moves on about 40 different products. Get access to the lounge and the community and all kinds of cool stuff in there. Now, a couple of other things that could represent why this could be a possibility for a bull trap is not only that the price, obviously rose, it's on declining volume, and we're seeing, large amounts of volatility kind of opening the door here, but we have indicators that are starting to flip over. So this is the NASDAQ summation index. This is day one of a potential change in trend. Remember, we had these changes in trend here. We had changes in trend here that led to further downside in the markets. Even right here, right? Downside into the markets. Right here, downside in the market, downside in the market. Now, it's not always going to be 100%, but it helps us, potentially put the brakes on. Now, to be more bullish, right, you'd want to see this start to uptick and this start to come right back down. There's times where you can see whipsaws like this, and that's always a possibility, but we got to be aware that, hey, it did now flip just like we were aware right when it flipped here and right when it flipped here. Okay, so yes, could it be a bull trap? It takes us up, but the parabolic star stays above and this starts dropping. That could be a divergence that can bring the market down soon. And then the summation index is day two of the change in trend. So the market's kind of, moving up higher, but this is still actually pointing down as the parabolic star is there. So if this starts gaining momentum, that's giving us some insight that, hey, this could just be a bull trap where we go up and then it comes right back down. So be careful there. The last one is the Saylor to Schiff tool. This one, I have to wait for the week to close technically, but you can see it is crossed down through the zero marker on the rate of change. So it's at minus 0.61% rate of change. So that is in negative territory. So if it closes the week down there, then I'm not going to get into the entire strategy, but just know that I marked out the sell signals in red, and you can see they've marked some pretty big moves to the downside in the price of Bitcoin. So is this the start of something? Is this where this kind of bear market rally is going to get hit and faded once again? Well, time will tell, and this CPI print may just be the catalyst bringing this market that we just recently saw this rip into bull trap status. That's all I got for you on today's episode, everybody. Be careful and safe trading. See you later.